Let's talk about Bidvest, which was founded by Brian Joffe and has subsidiaries operating in distribution and trading and a large food service business in Europe.
Fabulous success story, of course. Now one of South Africa's largest corporates, got a market cap above 100 billion rand, 107 at last count.
Dividend yield 2.7%, price to earnings ratio of 18. Have you been a fan of Bidvest to this point, Rowan?
Yes, have been, and I think what you're seeing there is very successful international expansion, and particularly in that food services businesses. They took an attractive sector that they were involved in the South African market and have expanded really globally. Asia, Australia, and also in the UK, and are very strong in those sectors. They've also made some recent acquisitions in Italy as well, in Europe. So a sort of broad portfolio, and I think they are experts at it, and it's really grown to become a very sizable and very profitable part of their operations.
Have we made money off Bidvest previously?
We have. We've owned it over the years in our hot stocks portfolio. We've owned them on a geared basis. We don't currently own them, but certainly we've ridden. You'll see the share chart. It's a good time to put that up because that's a 5-year chart. Look how well they've done, clearing the stops and just traveling there from around 100 and something to well over 300 Rand a share. Awesome performance.
The debate used to go in terms of where Bidvest could get additional growth. You know, is it sort of steady as she goes, given the size? But given the performance from a share price perspective, that doesn't look as though it holds true.
Yeah, I think what happened is that the market recognized that the strides they were making in that food services businesses and the attractiveness of that sector, and it carries quite a high rating internationally, and you will recall they were considering unbundling that part of the business, I think, to improve the rating. But I think through that process and the results subsequently, the markets recognized the attractiveness, and so the rating has improved. You see a P of 18, it's getting quite high. It's one of the higher industrial ratings in the South African market. So you're wondering, how much more re-rating can we get from here?
Is it worth paying up for?
I think so. Look, food service, let's talk about what that is. That's where you have people that supply everything, if you like, running a restaurant, from the knives and the forks, the cutlery, the raw ingredients, the cold chain stuff, the high value stuff like meats and all of that, that take away your garbage for you if you want. So really it's an end-to-end service. They've got different fleets of trucks that fill those roles within different parts of the product, because obviously you don't need a refrigerated truck to deliver napkins, etc., etc. Fabulous business, and it's an international operation. I saw some of their trucks in Italy where I was recently. They're big in the UK. They've got a huge business which is in those highway food court type things, you know, like the petrol station convenience, what you call it. I mean, it's just a very broad-based business. It's got great currency protection, and the results from them recently, they always seem to be able to avoid having any earnings decline, because whenever one division is battling a little bit, the other is powering ahead.
So good diversification. Any risks to the downside?
I think what we're seeing is, and that came through in the last set of results, strong international operations tempered quite significantly by much weaker domestic operations. They still have significant exposure to the South African economy, and we're seeing very mixed performance there, demand coming down, and obviously pressure on margins as well. The dealerships business has been good, but we're seeing new car sales also under pressure there. So I think what you're going to see is that excitement of the international food services operations tempered by the domestic operations.
Hot or not, Paul, on Bidvest?
I'm hot on it. It's a core holding in our long-term investment portfolios and a stock we like to like.
Hot or not, Ryan?
I'm going to say not.
Ah, no, why?
It's just, it's balanced. 18p, there are going to be quite a lot of headwinds in the short term. I can't see it struggling to move up from here.
We haven't talked about the Adcock Ingram situation. Sorry, I'm wandering off course
No,
here.
that's fine. Go ahead. We need to talk about Adcock.
Yeah, so that's been quite interesting. I think it ultimately overpaid at 70 Rand, and now the standby offer at 52, but clearly the share's trading at around 54. Bidvest picked some more up at 51.90 actually, so clearly they are buyers. Brian Joffe said he's not selling any of his shares at 52 Rand, so I think the market's getting a little bit more excited with what they can do with that asset.
Sorry, Paul, he's not going to change his view. It's a not hot on Bidvest.
That's